Welcome everyone, hashtag askrobco. We are back, super excited, 2021, from one lockdown to another. Technical problems this morning, so maybe you can't see us, maybe you can. I believe you can definitely hear us. So that is the most important thing. So please, if you can't see or hear, put a message in the question board and let us know. Very happy to have you back. Missed you lots. Super excited to share all of our knowledge, all of our data, all of our intel, answer all of your questions and see what 2021 has for us. Hope that you're well, safe, your families are well and safe, and praying for a better 2021 for everyone in all of your communities, companies, etc., etc. Okay, so let's go straight into 2021. We've got some brilliant data for you today. James is somewhere in the background if you can't see him. Hello, James.
Hi, good afternoon, everyone.
Good. Welcome back. Hope you had a good break and everyone's doing well, James.
Yeah, no, really well, thanks. Yeah, good break over Christmas.
Great. Okay, so let's go straight into our data because we've missed the month's data. So if we go into the handouts, first handout is there to close out 2020. We have the 40-week post lockdown, start of lockdown, December 28th, 2020. Typo there, so that's nice, good way to start the year. So let's look at the data we missed over the last month. As we were following data following the last show, the data was released about the sales figure. So if you go down to the column where you see it highlighted in blue, and then you go to the one above that, which is 14th of December week, which is the week we missed before Christmas, you will see in the sales column 5 in the number 306, which was the highest week of sales that have gone through over and beyond the one special week that we had back in 16 with the tax changes. This was over and beyond the highest week in the entire year, 306, and we'd already beat records. We were hitting the 200 numbers week after week after week, and literally the week as Christmas entered, we broke all records that week, showing the tremendous volume of sales activity that was taking place. Completely unprecedented, because to get that kind of level of volume of sales, you need everyone to be working. You need the valuers, you need the conveyancers, you need the estate agents, you need all of the legal firms, you need all of the mortgage lending banks, teams to be getting those mortgage approvals and completions done. And congratulations to all of you. You made the highest transactional week of not only 2020, but all of the preceding years. And that was an exceptional team effort for everyone involved in the logistics and pipeline of all of this work to create that volume. Something special is required. So well done to all of you, especially in credit and risk, in sanction, in sales, for you to have created that level of transactional volume to go through. Shows incredible work ethic and professionalism. Well done to all of you. So those numbers off the scale. And just to move back to some of the other headline numbers, the big drop we've been seeing week after week after week, and we weren't sure whether it was the time of year or the lockdowns, was the properties coming on stream. Now that dropped quite normally to the 116, so that's the highlighted number in 21st of December, week 51. That dropped to 116, and that's normal because obviously estate agents were closed, the year was ending out, I think the trend preceding that week is the important one that we were focusing on. And from our highs of returning after the holidays or the August summer season in September to the 700 numbers, and then that consistently 500 numbers, we'd seen it drop because lockdown 2 kicked in, and then it came down to 400 and then 300 and then 250. And we've now returned in January. The numbers are still very low because we have entered into a third lockdown, and the activity levels in terms of new properties coming on stream, as is normal, just isn't as great. And so we need to follow that trend. It's a very important trend, just because the more volume you've got, the more stock you've got, further down it leads to the sales that are going to complete and go through. And that trend is a key one. And going back to the sales trend, we did close out with that record number of 306. I think it will take at least 2 to 3 weeks moving into January to find some rhythm, but that rhythm could now be delayed because of the lockdown that we find ourselves in. That rhythm could be delayed and maybe might not return until there's a relaxation, maybe in the first or second week in February. But we're going to have to really scrutinize those numbers over the next 2 or 3 weeks to see what happens, and also to see whether there are further restrictions on top of the third lockdown restrictions we already have that might create a significant change in the construction and property market that currently has been allowed to keep performing and open, that could change if the government wants to impose further restrictions. So already in the first few weeks in the new year, we've seen a bit of a slowdown, normally because of obviously returning from the break, but we've returned with a lockdown which has restricted the market to a degree, although the market is open. And then there's the possibility of further pressures on further restrictions that we're going to have to watch this space. James, share with us your thoughts on all of that and anything you want to add.
Yeah, thanks very much, Rob. So it's a positive end to 2020, as you were saying there, with the 14th of December sales figures tipping the scales at over 300 transactions for that week. So very positive, and obviously sort of buyers making the most of the sort of quite hot property market. As we find ourselves here, January 2021, the construction property sector is still open, but is rather constrained with sort of obviously buyers viewing properties being more difficult in this lockdown. There is still sort of political pressures and lobbying regarding the possible extension of the stamp duty land tax holiday of up to 500,000, which seemed to really create a bounce in the latter half of 2020. So there's still lobbying going on there, which could create that extra bounce, as that could possibly get extended beyond the deadline of the 31st of March this year. So some interesting trends to see. It's just a case of how long and what the severity is of the current lockdown 3.0.
Thank you, James. The last point I want to add on the data, and the data here is just tremendous, and it's a very, very powerful live intel and tool that we've obviously been utilizing throughout 2020 for those of you new to this, and internally with our core clients. We've been following this data for the last 5 years. That one of the key points on the right hand side, where we really focus on the big ticket stuff, the 2, 3, 5, 10 figures, is where you see the volume of the 2 and the 3 and the 5 million in that last month, over and beyond really anything that had been seen throughout the previous period of time, years, just emphasizes and clearly demonstrates the volumes we're talking about. And on the ground from a surveying perspective, we can acknowledge and clearly state that's what we were seeing and that's what we were sharing with you on a weekly basis. If we move to handout number 2, again, we have the mortgage approvals that closed out 2020. And I just want to highlight, we've discussed this on numerous occasions over the last 3 to 4 months. Hopefully you can all open that document, and if you can't, we'll send it on to you. And it's been posted on all the platforms. Back in July and August, mentioned that I was convinced we'd break through the 100,000 a month figure, and we did that for consecutive months now. And the chart just demonstrates where we've been hovering over that 70,000 figure for the last, say, 5 to 6 years, from maybe 14, stamp duty, etc., and then Brexit introduced, hovering between 60 and 70,000, and that's been a really steady market, but nothing like we would have seen back in 06, 07, 08 before the crash. To then return to those levels for the last few months of the year really just shows how strong and robust the market was performing. And all of you are aware of that because of the data we're going through and everything we're sharing with you. And now all of your questions and concerns that you're reaching out to us with is, where is that heading in 2021? And over the coming weeks, we are going to be sharing that with you. James, anything on mortgage approvals before we move to the house price index?
Yes, thanks, Rob. It seems to be a continuing trend of the sort of upward, steeply upward angled curve of the trend, something which I think could cool off in the next sort of couple of months, given the lockdown. So that'll be interesting to see, and we may get sort of a certain bounce in the property industry come the spring, we hope.
Yes, that's definitely watch this space. Stamp duty is a key area in the residential space. The government are going to play a key role in what 2021 looks like, both commercially and residentially. And the incentives that the government provide within property, real estate, commercially and residentially will be the key factor and indicator. The government is driving a lot behind these numbers, and it will require the government's continued, whether you want to call it intervention or want to call it support, to enable that volume to remain consistently through 2021. And we are at an absolute critical period here. There's no doubt about it. With the deadline coming, support and incentives are going to be required to allow the market to continue at the levels it's at. The last handout I want to share today is just the closing out of the UK house price numbers. That's handout number 3. If you just flip and pull that out. Halifax and nationwide figures follow pretty much the trend of what you would have seen in the mortgage approvals. Obviously, the big change was that in 14, the market was very, very hot, especially prime, super prime, and the increases reached that 10% year-on-year number, and the stamp duty changes were brought in to take the heat out, and then some capital gains and other duties brought in to really pull back the market and curb those growths, which is why you see the graphics that allowed the market to, be between 0 and 5% growth. And then you've got this huge increase that we saw last year, mostly built around the last quarter, nationwide at 7.3%, Halifax at 7.6%. We expect that to drop off when the numbers come through from the period preceding today's conversation. So we expect that to drop and soften because the volume would have dropped and softened over the Christmas and New Year period, and the fact that we've got the lockdown now. So we expect that to come in. All the economists and analysts are throwing their weight around where they see 2020. Some are saying it's going to pull back by between 3 and 5%, taking away those gains. Others say flat, and others expect a bit of growth. What that tells you is that no one really knows where it's going to head. What I can share is repeating the message I've just given you, is I believe a lot of that will depend on government policy around property, real estate, commercially and residentially, and we will know where that index will go moving forward when we get a clearer path and guidance on what the government is going to be doing. James, on anything to add on that?
Yeah, thank you for that, Rob. I think that draws us nicely onto the sort of social trends and social migration that we saw in the second half of 2020. Will people continue to be moving out of cities into more sort of out of town suburban areas, making advantage of the sort of more value for money houses and more outside space? Do you think this will be a continuing trend in 2021?
Absolutely. The data and information we're being fed is clearly going down that path. I think we've got some really nice info now demonstrating housing stock in terms of the breakdown of internal areas, external space, outside space, flats, houses, etc., inner London, outer London, home counties. We're seeing some very clear data and trends there. All the agents we're speaking to and the conveyancers are now sharing their last 6 months data to support that trend, and that is definitely going to continue into 2021 and remain robust, and I don't see anything stopping that.
Yeah. And it'll be interesting to see with these trends how they will affect the built environment and the property sector as we know it over the coming years. Could there be a resurgence in some retail parks and new retail parks to suit this social migration, sort of new out of town business parks, any changes to the high street, possibly the use of office buildings as we know them? This could be an interesting watch this space in the coming years.
I think definitely social and business migration is going to be under the microscope this year in 2021. Some very clear patterns are going to play out when lockdown 3 expires and we go back to some kind of semi-normality in life and trade. I also believe that the climate piece is being brought into the attention of both the residential and commercial space to a degree where the requirements moving forward on energy, conservation, climate are going to play such a role that that's going to join up to any kind of migration, especially in requirements around climate and energy moving forward. So I'm really interested in the integration of those two and the modeling around that over the next 10 years. And I think we're just seeing a shift now in that, and I'm fascinated how that will move forward. What else have we got, James?
Well, I was just following on from those possible incoming trends in the next in the short to medium term. I was going to say, ultimately, this could bring some further changes in terms of the evolvement of the national planning policy framework, with some reforms already in the pipeline, of course, in terms of permitted development and home extensions. So a little sort of prediction from ourselves in terms of how the government and legislation could react to these social trends and social migration.
Yeah, I think government policy, I think you're right, is definitely going to change and move around this migration and change in social trends and business trends. And I think you're right. I think there's going to be new patterns which create new opportunities, which create new initiatives, which create markets to change and go in different directions. And I suppose from an insider's perspective, being a key stakeholder within an industry of finance and lending and sales and credit and risk, it's for us to follow those trends, spot those trends as early as we can, make the stakeholder and wider community aware of those trends to then implement that into their operations in terms of what exposure they have, both positive and negative, and manage risk sanctioned around that as implementation of government policy comes into play. So I'm absolutely in agreement with you, James. I see that as a really, really key initiative, and I think the government will have a very key role to play in that to determine the direction that we go from that specific aspect that you've raised there.
Yeah. Thank you, Rob. I just wanted to recap quickly on 2020 as well. It saw Brexit, it saw the emergence of COVID and lockdowns in the UK and across the world. This did little to dampen the prime central market here in London, with some of the largest house sales we've ever seen. And just to recap on a couple of those, we saw a Rutland Gate sale at 210 million. Now this was just before COVID in January 2020, but represented a huge deal in the London property market. We had deals in Grosvenor Square of just under 150 million pounds for a townhouse. We saw Regent's Park mansions sell for 104 million pounds. All of these happening in Q2, Q3 2020, when the prime central London market was really showing resilience and an upward trend in terms of its pricing and also activity.
Thank you, James. To share with you, everyone, moving forward, and obviously welcome everyone back, we have got some really, really good key guests, insider market intelligent knowledge coming through over the coming weeks. So where we saw the market out with the last show in 2020, we had a great guest providing product and pricing and key trends within the lending industry. And we're going to move on to some really specialist subjects in the coming weeks that are going to cover some topics such as the buy to let, the investment market, build to rent, HMO specifically, commercial trends moving forward, leasehold enfranchisement. We're going to carry on with the cladding piece and keep updating you on that. All of the key emergencies and niches and specialist areas of expertise, conveyancing as well. We're going to bring some very high level intel from what we're seeing and special guests within those areas to start sharing their expertise within their specialisms with you over the coming weeks, as well as providing you with all of the up-to-date intel and data and market knowledge that we're seeing on the ground every day to further enhance the offering and further add value to everyone that's joining in every week, whether live on this platform or through all the other platforms on YouTube and the other networks. So we're really going to ramp it up in 2021. That requires your continued support, questions, areas of need. So please reach out, because ultimately we're providing you with a data intel live feed of what's happening in all the markets. And to further provide you with what you specifically need, please continuously reach out and say, Rob, please can we touch on this next week? Or Rob, can you give us this data and information? Or Rob, what is your view here? Or James, what is your view in that? Or James, can you provide us with further intel? We have an abundance of knowledge, information, experience, intel, and data. We want to be the platform that shares it with you, who in turn shares it with all of your colleagues every week, that enables you to make really good, fast lending, risk, sales, credit, sanction decisions. To do that and to help you, we require, one, you being here every week, but more importantly, we require your feedback and input in terms of what you want the most to help you carry out your work and do your jobs to the best of your ability. So please take advantage of that offer. Please continuously reach out to us in any shape, way, means, or form in terms of what you want, and we will guarantee that we will provide you with everything that you're looking for to the best of our ability with the best data, intel, and information that we have. James, final comment for today.
Yes, thanks very much, everyone, for joining us. Happy New Year. We've got Toby Nicholson from IR Alternatives on the show next week. So please do write to us, let us know any specific questions you've got in regards to the PRS, the private rental sector, and the build-to-rent industry. We'll be covering that in some depth, going into the key transactions over the last 12 months, who the main operators are, who the main developers are of building out the housing stock, and a real sort of overview of how that market works and operates.
Yeah, I think it's a brilliant guest we've got lined up next week. Anyone that has exposure to even basic buy to let or HMO investments, anyone that has commercial lending, it will be great for you to go that step and listen to our guests and ask the questions on what it's like to do volume-based commercial lending against residential assets, and the build to rent space is a fascinating one that I know a lot of lenders who are listening are either already in or looking to go into. So I think that's going to be fascinating, and really look forward to that next week. So thank you all for joining. My prediction for 2021, which is not going to be a property related one at this moment in time, I'm really hoping that lockdown 3 across the entire country is the last national lockdown that we're going to see. And moving forward, there might be local lockdowns, but hopefully 2021, with the vaccines that are taking place in their millions, will mean that this is the last COVID related UK national lockdown, and it will be a thing of the past across the country, and we can really move forward and be positive in everything that we're doing and make 2021 a better year. So really looking forward to that. Thank you all for returning, and looking forward to a great year of engagement.
Thanks very much, everyone.
See you all next week. Take care. Thank you.